If you remove Bitcoin, the entire space is $500 billion, same size as Louis Vuitton, the parent company of Louis Vuitton. You could own all of ETH and all its alternatives and all of DeFi and all of stablecoins, or you could own a manufacturer of purses and champagne. And I think when you think about that comparison and you think about all the things Ryan said about all these incredible things that could happen, you see the scale of the opportunity and you're reminded just how early it is.
All right, and welcome back to another episode of 0x Research. The show is made possible thanks to our incredible sponsors, Chainalysis and Flipside. We are recording this episode on December 5th, and we have a great interview with Ryan and Matt from Bitwise. We get into all things of the recent marketing happenings, and it's really interesting because they have this unique TradFi perspective, yet they're still very in the weeds and aware of what's going on in the depths of DeFi and the broader crypto markets itself. But before we get into that, we got a brief little intro section for you guys. We're joined here today by Matt and 0x Pibbles from the Blockworks research team. I think we should get right into it, and so we'll do a little hot seat, cool throne. Matt, I know you got a good one with Maple Finance. Can you tell us a bit about that one?
Sure. So for those that don't know, Maple Finance is an uncollateralized lending protocol on Ethereum and Solana. So what that means is that big hedge funds and market makers in the crypto space can go on Maple, request to take a loan, and many traders can put up ETH or USDC collateral or Solana on Solana, and in return, they're going to net an APR or a yield on their lent out funds. This morning, they had a $31 million default by orthogonal trading. So orthogonal trading is one of these market makers, one of these hedge funds that borrows funds. So supposedly they defaulted on $31 million in loans. This makes up about 30% of the total loans that Maple has ever originated. And there's some reports and speculation that the damage might be even worse, that there might be an additional $10 to $11 million in defaults that they're kind of trying to maybe cover up, or just because they haven't been due yet aren't included in that $31 million estimate. But there's another $10 or $11 million that have been lent out to these firms that have defaulted on their loans. So Maple Finance is definitely in the hot seat today. It's not the first uncollateralized and under-collateralized lending problem we've seen this year. We first saw it with Three Arrows Capital and again with Alameda, and it just seems that this is a non-sustainable way of lending, especially to crypto firms. The risk is just too high. There's also a little bit of speculation that Orthogonal actually had funds on FTX, so they might have been part of the fallout from the Sam Bankman-Fried FTX Alameda problems over the last few weeks. So yeah, just not a great day for Maple Finance or MPL holders, which is their token.
Does MPL act as a backstop to any losses incurred by the protocol, or did they have an insurance fund?
So cover providers, there's multiple parties in the Maple ecosystem, but cover providers are the first stop against default. So they'll be the main ones that lose money. Maple stakers should be okay, but the MPL token is down, I believe. Last time I checked, about 20%, maybe even more so now. I'll double check real quick. Looks like it's about down 27% as of Monday, December 5th at 1:15 p.m. It could go down more from here and is definitely not doing so hot. We'll see how the ecosystem manages to, if they manage to rebound and kind of bounce back from this.
Yeah, under collateralized lending is just a tough problem to solve in crypto for pretty obvious reasons. It's you don't really have credit scores, you need default recourse, so that's a challenging problem to solve, and I commend Maple for trying to do it, but this is we're seeing exactly why it's such a hard problem, but hopefully we can get it figured out in the near future.
Yeah, I think what's interesting here is that so you have these credit underwriters who have been working with different crypto under collateralized or uncollateralized lending projects. I think one of them is called Credera or Credora. But when they're doing a credit check on a fund, it makes you wonder what the hell you're even doing as a credit checker. We saw the diligence on FTX investments or with Sequoia and FTX. So if I'm working for Credera or Credora, I see a fund that's oh, they have a lot of money. Looks good to me, A+. And then something like this happens. There's too much stuff going on. It's way too easy for someone to misrepresent themselves as a fund to where this credit underwriting thing is just not working out.
I think this is a problem that extends even beyond crypto and just uncollateralized and under-collateralized lending in general. It's not, really a sustainable business. It requires so much trust in your counterparties, and it's just not the way it works today is not how it will function in the future. I do have faith that at some point DeFi uncollateralized and under collateralized lending will work, but I don't think it's really going to be under collateralized. I think it's just going to be collateralized with real world assets, illiquid things. So not just liquid, tokens on chain, but maybe things off chain and things that aren't very liquid. But there has to be default recourse. There has to be a way for the Maple lenders to get their funds back in the case of a default like they saw today.
Yeah, and in a time when we've seen CeFi collapse, it really is a gut shot to see some DeFi acting a little over their reach as well, and that kind of leads into the next hot seat we have here with Maxine Waters, who is the chairwoman of the U.S. House Committee on Financial Services, and she put out a tweet that said, at SBF FTX, we appreciate that you've been so willing and candid in your discussions about what really happened at FTX. Your willingness to talk to the public will help the company's customers, investors, and others. To that end, we welcome your participation in our hearing on the 13th. So really interesting to see a thank you message going out to SBF at this point, but maybe I guess the optimistic view here would be she's like baiting him into coming into a hearing, and to which SBF responded to basically saying that I'm happy to testify, but I don't think I'll have all the information by the 13th, which is really in line with what he's been saying in this tirade of media tour he's doing, saying, I just don't have all the information. I don't have all the information. So I guess at least he's staying consistent, but to me this is just really frustrating to see that we have like an important regulator reaching out and saying thank you for being candid in your discussions, that you robbed us all and you're a fraudster essentially. Really kind of leans into the fact that it does seem like mainstream media really is the ones that are kind of highlighting him and holding his hand throughout all of this. In reality, CT and the rest of people in the depths of crypto really have like 99.9% more knowledge than everybody else. It's interesting in this one.
Yeah, as the second largest Democratic donor, it's not really a surprise. I don't really like to steer into politics too often, but yeah, I mean, the truth is in the money behind it. So not really surprising, but yeah, it's a little bit disappointing to see like all the outside people who don't really understand what happened, like make their remarks and kind of put Sam on this pedestal. So hopefully like more truth comes out over the coming weeks and he gets, appropriately prosecuted.
Ditto on Sam's take. I forget who said it on Twitter, but that SBF wasn't the biggest donator. He was the biggest investor in these politicians. And I thought that was a really good take, and it's just, can't forget that.
Agreed. The first thing I thought when I saw that tweet is how much did he just wire her?
I can take it over for the cool throne. I've got Circle. They announced that they terminated their business proposition with Concord Acquisitions Corporation to take the company public via SPAC, at least for the time being. Not really a huge surprise given the market conditions, but Circle is absolutely printing money. They've got like $35 billion of short-term treasuries, and in a rising interest rate environment, they're printing. They're making like $275 million a quarter or something like that, a little bit over $1 billion annualized. And stablecoins is one of those things that continues to gain adoption, and the amount of reserves that they're going to have is going to continue to grow more than likely, because it really is one of crypto's killer use cases. So pretty easy cool throne with Circle.
Yeah, one interesting thing for me here is, the ever circulating Tether FUD is that it's not backed one-to-one. And a lot of that stemmed from those low rate environments where, they had all these deposits they were holding, and naturally you'd be wanting to try to generate a return off the dollars you're holding in exchange for these USDT tokens. And with this rising interest rate environment, you see like someone like Circle, who has always been a little more transparent into their holdings that back their USDC token, and there you can see now the amount of revenue that they're generating in this rising interest rate environment. It creates like an incentive to actually be backing your token with one-to-one deposits held in what's perceived as the most risk-free asset, or U.S. Treasuries. So it kind of I think it's a net positive for the ecosystem that we're kind of like trending in this direction. And with the continued battle at Tether's peg, it's good to see that it probably is a little healthier than everyone seems to think.
It's kind of crazy to see that MakerDAO is getting 1.5% APR on their USDC, custodying it with Coinbase, and meanwhile USDC is getting something like 2.5 or 2.6% APR, and that's not even across all their funds. Obviously, they need to keep a huge portion of their funds liquid so that people can redeem their USDC back to USD. But I just think it's kind of crazy to see that disparity between DeFi and CeFi.
Another cool throne we're seeing this week is definitely Chainlink. Over the past 30 days, it's been doing really well. I think it's up 30% off the bottom. And this is because of Chainlink staking, which starts on, I think, December 6th for early access. And then it opens to the public December 8th. And this is a pretty significant advancement in Chainlink, being that it's so important to crypto and DeFi overall. Chainlink kind of runs the entire crypto ecosystem and, keeping track of prices and helping with liquidations, etc. So I think it's a good month for Link holders who have been loyal since day one. I really like the idea of Chainlink starting to actually benefit a lot more from how much the crypto ecosystem depends on it.
Yeah, strong agree there. I think this is pretty huge for the Link Marines, and like you said, they've been super loyal for years, literally since the very beginning. I also saw that they have a build program where basically projects that are just starting to bootstrap and maybe can't afford their services, they're able to kind of make a long-term service agreement in exchange for node operators providing these Oracle services in exchange for future protocol revenue or even native token payment. So I thought that was kind of neat. I guess the one rebuttal I have is just things like Eigenlayer, where you're introducing restaking staked ETH. I feel like that makes a lot more sense for something like a Chainlink, just because, one, ETH is worth more, but two, it's, powering the ETH ecosystem. So I just feel like there's better synergy there, but maybe I'm not exactly sure on the design of Eigenlayer, but maybe it's possible to have a 2-token staking model where you could have Link and ETH securing Chainlink, but that'll be something I'm watching going forward.
Yeah, people sometimes forget just how important Chainlink is. DYDX, GMX, so many protocols. MakerDAO, a lot of these protocols cannot function without having Chainlink, having a proper mechanism for working correctly. And it's just super important. So it's good to see them decentralizing and kind of maybe even moving away from the Link Marine meme. And they were probably the biggest winner of DeFi Summer 2020. So it's nice to see, actual value accrual, fundamental technology building, kind of what it's, in my opinion, a little better than the memes that we saw for the last few years.
One thing I was thinking about, and this is totally on the far end of the spectrum for speculation, but how they had the partner programs. It looks like what would be really cool is if someone built a bribes model on Link staking. So you stake your Link with, in favor of this project, or you help them bootstrap something. It would be really cool if you had this whole bribe UI set up and everyone could keep track of what tokens they're getting airdropped.
That's super interesting. I know you've been digging into the Aura and Balancer combo, so that's funny you bring that up. But yeah, no, that makes a ton of sense, and we kind of see the shift towards making your token more valuable, which is something I think we're all a little bit excited about, and getting away from these more useless tokens. So yeah, even in the depths of what was a busy week, things have still calmed down a little bit, but there's still a lot going on, and that's the beauty of crypto. Even when you expect it to be a boring week, it never does that for you. And actually last week we saw the Across Bridge have their token airdrop. So sponsored by Flipside here, we have a nice little dashboard built to kind of review exactly what it was that went down and leading into this token airdrop. And then additionally, kind of how we've seen bridge volumes change in that light. And so if we look at these two charts here, mostly focus on the charts on the left, and for the listeners rather than the viewers, we have a comparison between Hop, Synapse, and Across bridges. And you can see the total value bridged in dollars as well as the number of bridging transactions. And so if we look at this chart on the bottom here, the number of bridging transactions, You'll see starting in about early October, mid-October, we see a huge uptick in across-bridge transactions, yet not a massive volume uptick in dollars. So that's generally a good sign that users are like sibling transactions in order to simulate usage of the bridge in hunting an airdrop. And then following the airdrop in early November, mid-November, you see that that's significantly dropped off in the number of transactions, and volume has kind of tapered off as well. So, it is interesting to kind of see that dynamic play out. And if we look at the actual airdrop itself, interestingly enough, only about 4.5% of the ACX airdrop has been claimed. And of that claimed portion, it looks like about 36% of claimers are still holding their tokens. So a pretty high percentage of airdrop recipients or claimers have dumped their token, but only a small number has actually claimed that token. And they did a pretty interesting airdrop mechanism where they actually airdropped you LP tokens. And Pibbles, I know you were a recipient of this. I'm curious how your experience went with this.
Yeah, it was the worst airdrop experience I've ever had. It took me like an hour to figure it out, and I had to ask so many people. And like across all my chats, everyone's like, how the hell do I claim this? So it was just a ton of work. You had to like claim it on a cross. Then you had to unstake it on a cross because it was in some balancer pool. And then I think you had to do like a third transaction somewhere else to like withdraw it from balancer. And then you could finally sell it. And I mean, by the time that happened, it's down 50% from when you actually claimed it. I also just think bridge tokens are like not a good value investment at all because, bridge tokens, they represent governance and like, cool, maybe they can represent fee share in the future. But the reality of bridges is everyone wants to be the fastest bridge and everyone wants to have the lowest fee. So it's kind of a race to the bottom for any bridge token because they're just going to try to be the cheapest, and that means no revenue to token holders. Like, I don't even know if you're a seed investor how you actually benefit from investing in any of this.
Yeah, this takes me back to my point with EigenLayer too. Like in terms of infrastructure, I just feel like it makes so much more sense to use something like EigenLayer instead of having your own native token. But then again, that's kind of where the incentives come into play. Everyone wants to launch their own token and make some money off of what they're building. So I guess it's no surprise that Across launched their own token.
I gotta disagree with the not liking bridge tokens, obviously my opinion, but like we've seen Synapse make, I think something like $18-19 million in protocol revenue over the last year. Don't quote me on that. Maybe it's more like 16, 17, whatever, somewhere in that range. That's a lot of money in protocol revenue. And although the token has no actual value accrual today, I think as we see cross-chain narrative, I'm going to take it back. The multi-chain narrative continue to gain momentum that these bridge tokens, as they maybe like in the future give real yield back to the token holders or something like that, that they could actually be a solid place to keep an eye on.
Yeah, and as a Thorchain bull, I'm really excited about the economic design that team kind of used their token and how they use it within the economic design. It really plays into the security mechanism as well in the proof of bond consensus. Pibbles, I saw you laugh, and you've heard me say that's just way too many times. But I guess that just goes back to kind of what we were talking about with Link, right? Like useless tokens, I think, are going to become quickly outdated. But yeah, no, that's a good point on the race to the bottom on zero fees as well.
Yeah, as we transition over to the interview, I wanted to take a second to thank our wonderful sponsor, Chainalysis. They're one of the leading crypto analytics providers and are helping bring the tools we need to legitimize our industry. They enable investors to track funds on-chain with ease, and they also offer some awesome research that's available for free on their website. We can link that in the show notes. They also offer some really cool courses that go really deep into all things crypto, and it's definitely worth checking out. Chainalysis is building the tools that our industry needs, so be sure to look at them in the show notes.
And as always, a special shout out to Flipside, who has the most comprehensive on-chain data that really gives you the ability to kind of dive in and work smarter. The ability to instantly query data for free, of course, and browse some of these elite dashboards built by their team. Special shout out to Misa GHLB, who actually built the across dashboard we were looking at today. And if getting into dashboarding is something you want to do, be sure to check out our show notes, because Flipside has a special bounty posted to earn up to $75 in USDC. So check out the show notes. We'll have that listed there. And without further ado, we'll jump straight into the interview with Matt and Ryan from Bitwise.
Alrighty, we're here with Ryan and Matt from Bitwise. We're really excited to have them on the podcast, have a conversation. We've talked a couple times on off the record, so it's nice to get a recording here. Thanks for joining us, guys.
Thanks for having us. We're excited to be here.
Yep, happy to be here.
All right, now the question everyone is talking about, FTX, Alameda, what's your guys' take on the whole situation? You guys kind of come from a more unique perspective in the crypto landscape, so I'm sure people would love to hear your thoughts there. Matt, I can hand it to you first.
Sure, Sam. I mean, I'm exhausted by the situation. I think most of us are exhausted by the situation. I feel like this guy stole like 6 to 12 months of my life. And I come off much better than other people who we stole money from. I think it's a classic fraud. I know we've been listening to him explain himself away and try to position it as sort of incredible mismanagement, because that's a lighter issue. But I think if you abstract back, he ran an exchange, people trusted him with his money. Instead of honoring that trust, he took that and gave it to an affiliated hedge fund that then made terrible bets and lost it all. I think it's important to keep the big picture perspective from it. In terms of what it means for crypto, there are a lot of histrionic takes out there that it's the end of crypto, that it'll set it back for decades. Crypto's only been around for like a decade, so that's quite a statement to make. I think it's a 6 to 9 month setback. It's definitely objectively bad in the short term. I think it'll lead to some cleanup and lead to some regulation that will be positive, but it's definitely temporary. It doesn't change anything fundamental about most crypto assets. I think you could argue it raises some existential questions around Solana. That's an interesting thing to debate. But for Bitcoin, Ethereum, Cosmos, the DeFi sector, it's a blip and will recover, but it is an annoying blip and a painful blip, and one that we'll be dealing with for a while still, I think. I think one thing that happens in crypto, if you look over multiple cycles, is we get these huge bull periods and then we get over our skis and then we don't make the same mistake twice. So like 2011 to 2013, huge bull run up, then Mt. Gox collapsed and we built institutional quality custodians. 2015 to 2017, Ethereum and a huge run up, and then fraudulent ICOs. And then we pivoted away from that after the reset and built real applications, DeFi, NFT, stablecoins, right? This was a huge bull period where we got into lending and we raised enormous venture capital. We're going to pivot from that and have better centralized exchanges, better decentralized exchanges, and less excess in terms of lending and activity. And I think, we do seem as an industry, even if it's slower than we wish, to learn from the past issues. I think that's what I see when I look at those pullbacks. And I think we'll learn from this one, as Ryan was pointing out.
Yeah, I strongly agree with all that, and this feels like something that's like, a pain in our side now, but in the end, it'll end up being this like healthy trimming of the fat, if you will, and we can move on from here. And I feel like that's, I feel like a lot of the people who pay true attention to what's going on in these markets and what's going on in DeFi kind of like lean towards feeling that way. But I'm curious, how do people like traditional finance folks, how do they see something like this? And, are they like a little more accustomed to this happening? We've seen like an MF Global before. We've seen a Bernie Madoff. Is this something that they can kind of like grasp and understand a little easier than something like a Terra Luna unwind, where someone says there was a $40 billion unwind, and it's pretty hard for them to grasp the concept of like an algorithmic stablecoin just right out of the gates, right?
It's so true. It's so funny that you mentioned that, because for crypto Twitter, this is like this existential blow up. We're having trouble reconciling this person that we put on a pedestal with the reality, and we're all feeling let down and like, why didn't we diligence it? When we talk to financial advisors and family offices, they're like, yeah, this 29-year-old was running an offshore exchange in the Bahamas with a hedge fund right next to it. Like, we've seen this story a million times before. Of course, he's just a fraud. Of course, he blew up. It's Bernie Madoff. It's John Corzine. They've been faster, from my perspective, to contextualize what it really is, which is just a fraud. It points out things we need to correct in the crypto ecosystem, but they didn't have this sort of existential woe is me that I saw on crypto Twitter. And it's been funny to see that. That doesn't mean they don't want to see it cleaned up. They don't worry about contagion. They're intelligent, but they put it more in the box of what it is, which is fraud. And as you said, Dan, they've seen that before in traditional markets, so they know that it doesn't mean the end of stocks or the end of options. And in this case, it doesn't mean the end of crypto.
Yeah, I thought there was an interesting nuance from my personal life over the Thanksgiving holiday where I had the experience, like I think we all anticipated that there would be a lot of talk about the FTX and everything going on since it was being covered so much by the media. And because, I don't know, generally when we go home for these type of events, I think the non-crypto enthusiasts are skeptical of crypto and often those in the industry find themselves kind of, back against the fence. I thought it was really interesting, however, in some of the conversations I had with friends and family who aren't in the space full time like we are, or maybe aren't even in traditional finance, like the financial advisors and investors like Matt was just talking about. And they seem to understand pretty quickly that this was just your typical kind of financial fraud, or, they can relate it more to the Bernie Madoff and to those types of like fraudulent events and can understand that quicker than I feel like they've been able to with some of these other elements like the 3AC blowups and all that, even though ultimately we are kind of talking about the same thing when we look at 3AC and the implosion of those funds and then the ongoing contagion that ultimately, probably led to FTX in the implosion here. And so I just thought it was interesting that this, even though this was a huge company, the way that it happened and it happened so quickly that I think the traditional public is following along with that line of thought, which is great.
Yeah, strong agree there. It's unfortunate that they had like such a prominent like brand in terms of advertisements and everything like that because everyone knows about it. But strong agree with you there, Ryan and Matt. Like it could have been a lot worse from the perspective of the Thanksgiving conversations where people actually seem to understand it a little bit more than I would have guessed going into it. But in the same vein, you can talk about how people from traditional finance or maybe even just average, people who are observing the industry are looking at it. But how do you feel regulators are looking at this? Do you think this is kind of opening the door for kind of blanket regulation where they bundle up DeFi and CeFi together? Or do you think they're like, okay, let's get centralized exchanges, regulated and properly monitored before we dive into the DeFi space?
Oh, wow. What a great question. I think the first thing you're going to see in regulation is regulation around stablecoins. Stablecoins are like this third rail regulatory topic in Washington because there's so much like money market funds, and there's been so much historical regulation and worry about money market funds and their intersection with the 2008 crisis that I think that train was already moving pre-FTX, and I think that'll be the first thing that happens. I don't know that we're going to get sort of an omnibus pan crypto regulation. I'd love to know what Ryan thinks. I suspect they'll chop it up and try to figure out something for spot crypto exchanges. And the DeFi stuff, I think, will be harder. That's a harder regulatory nut to solve. I don't even know at a nuanced level all the ways I feel about the different regulatory challenges in the DeFi market. But I think it's pretty clear some of the steps we could take on centralized exchanges to improve things, segregating customer assets from exchange assets, more traditional broker dealer stuff, being more clear about what's a security and what's a commodity. I think those are things we can work through. I think the DeFi stuff will take longer, but I don't know what Ryan thinks. He's maybe more of an expert here than I am.
I agree that, I agree with your take on that, Matt. I think really regulators are in the same boat as venture capitalists that we were kind of talking about earlier, where they were getting really comfortable, a lot more comfortable with crypto and allocating, resources to crypto, or even associating their brand, if you will, like with crypto. And so obviously we saw that with a lot of, well-known regulators and lawmakers having meetings with SBF and the FTX team. And so I do think that this is unfortunately like a 2 steps back, 1 step forward for regulation, because there's not like the lack of risk associated with embracing crypto as a regulator, because you would have the evangelists of the community, the crypto community, and all the capital that is in crypto kind of behind supporting your cause. I think that is now overshadowed by the negativity that they're going to face and the backlash that they're facing with the FTX and SBF debacle. I mean, FTX wasn't a US based company, and so there is the whole debate around like what could US regulations have done here to help or to stop it. But I think what it shows is that without proper regulations and without the clarity that like we have all been asking for a long time, that it's letting these bad actors find their way into the industry and actually flourish in a very, very negative way. And so I do think that I was pretty bullish on the regulatory environment, I would say, a month ago. I was looking forward to the midterms and for politicians to embrace crypto, and I definitely don't feel as excited about it now, and I'm worried that it's actually swung in the other direction, where now the support goes for those politicians and regulators and lawmakers that are anti-crypto, and so that's where I think the 2 steps back kind of comes in.
Yeah, I feel like the elephant in the room too is like the still unfolding situation with Genesis and DCG. I feel like people were starting to think maybe we're out of the doghouse there and it's not as bad as we thought, but now more information came out today saying, maybe it's not as good as we thought. So do you guys have any insight into that perspective and what kind of backlash would happen there if they did blow up?
Yeah. I mean, I would start by saying the framing is correct, because the way these contagions happen is it doesn't matter if the next domino is smaller, right? If some third-rate exchange buckles tomorrow, or some lending platform that we've never heard of buckles tomorrow, that doesn't matter at all. It only matters if the next domino is bigger, and that's why people are so focused on Genesis and DCG. It's one of the few other dominoes that could fall. It's like them, Binance, Tether, then you're out, right? That's all you have. I think it's hard. It's hard from an outsider to say that what exactly is going to happen in this space. What is clear is they have an extremely valuable core business, right? We do know that Grayscale, which is a friendly competitor to Bitwise, is a legitimate business, and we can all model their revenues because we know what assets they have and we know what they're earning, and that's not going away, and that will help cushion any blow. I think they'd have to have made a series of incredible missteps to really get to the point where there's more than like a haircut that we're talking about. And I think a haircut is something that crypto can handle. But I don't have any special insight. Maybe Ryan has greater depth. I don't think we're going to see the sort of catastrophic failure there that we saw in FTX, or that continues this domino contagion.
Yeah, the contagion story, I feel like, has kind of calmed down a bit over the past few weeks. It was really interesting this time around. Being like the second crypto credit crisis that we have faced this year, where if you look back at 3AC and Luna and the events that happened there was like many weeks following the actual implosion of those funds before the contagion was fully kind of known. And obviously it actually was months until it was fully known, because here we are today, still kind of reeling from the effects of it. And so I thought it was a little strange that a lot of the conversation I was seeing and hearing from people was that they thought that the damage was done kind of on day 0 or day 1 or 2 of the FTX implosion. That would have been, I think, 2 to 3 weeks ago at this point. And it just doesn't make sense, because traditional markets don't unwind at the same speed that crypto markets unwind. And so yes, the on-chain impact could be felt right away, but clearly there's so much going on off-chain that it would likely take a long time for that all to be shaken out. So all that to say, I guess, here we are a few weeks later, and I do feel like a lot of the contagion story has kind of calmed down, and people are less concerned, or maybe think it's priced in. But that's where I start to get weary again. And like you were saying, with new news coming out, I mean, Matt and I were talking about this, where everywhere there's been smoke these past few weeks, like there has been fire. And so while Genesis is a very strong business, Galaxy is a very profitable business with strong cash flows, there's clearly been some black swan events, or however you want to categorize it here. And I am a little bit concerned that we haven't seen the end of it.
Yeah, I think that's a reasonable concern. There are other places that I might raise more. Like I would be thinking about Tether. I would be thinking about Binance if I had to go into my dark conspiracy hole theory. Centralized offshore entities haven't fared particularly well in the fallout of this, but I think a lot of it is also already priced into the market. We'll see how it goes.
Yeah, and so if we kind of pivot into kind of like what's left from here, and one of those onshore and regulated entities is Coinbase, who finds themselves in a pretty exciting position, right? So with FTX out of the picture, that kind of leaves Binance and Coinbase floating towards the top of that centralized exchange list, and Coinbase finds itself with a pretty good relationship with Circle, and USDC continues to be pushing up the market cap rankings with USDC. And so, Matt, you put out a pretty good tweet a while ago, kind of taking a look at Coinbase's business model and whether or not, how tied they are to the commissions that they generate on their platform. So I'd love for you to kind of dive into that thesis you have around Coinbase.
Yeah, I think it's one of the most phenomenal companies in the US, and the fact that it's so aggressively on sale right now is enormously interesting. The point I was making, Charles Schwab, obviously a dominant broker in the US, launched its business in the 70s by offering discounted transaction fees. And one of the classic criticisms of Charles Schwab at the time was that those fees were going to go to zero. And so your margins are going to go to zero and your business will be worth nothing. But if you look at the evolution of their business over time, they've always been able to extract about 30 basis points of all client assets, 0.3%. But the way they've done it has varied. At first, it was through commissions, and then it was through having money market accounts that they paid sub-national interest rates, but they forced customers into them. And then it was launching their own ETFs, and then it was charging other companies to sell mutual funds to Schwab customers. The point is, if you have a bunch of people with money who've entrusted your organization to hold that money, you can find ways to monetize that besides the most basic way of engaging in transactions. That's just a way of bringing people onto the platform. And if you look at Coinbase, that's the same criticism people level. Either their fees are too high and they're going to come down, or Uniswap is going to eat their lunch, right? Those are like the two criticisms for people who assume crypto will persist. But if I look at it, I look at their user counts, which have just gone amazingly upward. If you look back at this time in the past cycle, there were maybe 20 million accounts. Now there are 100 million. If you look at their assets on platform, how many assets are on the platform? That has been nowhere but up and to the right. And then the point I was making on this blog is you're already starting to see it. They're having huge growth in their subscription and services business, even as their core transactional business sort of treads sideways. What are they doing? They're doing things like staking. They're doing things with actions around crypto assets, and they're able to charge a higher fee from that. I think it's the most important exchange in the world. I think it has the largest assets on platform. If you look at all the proof of reserves that have come up, Coinbase has more assets on platform than any other entity in the world. And I think holding that customer base is just enormously valuable over time. So, you could tell me that the transaction fee on Coinbase is going to go to zero, and I would still be bullish on their business because I think they will find ways through staking, through lending, through margin deals, through allowing companies to sell their funds on their platform, to expanding into NFTs, to doing other things to monetize those users. And I think people are looking at the wrong metrics if they're looking at short-term revenues and transaction costs.
If you can't tell, we love data here at Blockworks Research, and Chainalysis, the leading blockchain analytics company, shares this passion with us. We use data to extract alpha and find the next thing coming in DeFi, but Chainalysis is doing the gritty work and building trust in blockchains. To onboard the next $1 trillion of capital into the industry, we need to grow safe consumer access to cryptocurrency and promote more financial freedom with less risk.
Chainalysis has some of the most comprehensive and reliable data in the space, and they use this data to power a full suite of their solutions that can be utilized by industry professionals. Best-in-class training and certifications are also led by Chainalysis and some of the brightest minds in the space. If you haven't heard of Chainalysis, you got to check them out, and we'll link to them in the show notes. Yeah, Ryan, as the more DeFi-focused guy, I'm curious, do you think like a revenue avenue for Coinbase would kind of be being the front end for retail users for DeFi potentially. I know they have their Coinbase wallet extension and a lot of people like that, at least friends that I have who are just kind of like dipping their toes in the water. How do you view that?
Yeah, I agree. I think Coinbase has a really compelling offering as like a non, in the weeds kind of crypto savvy person who doesn't want to necessarily have to, I don't know, like deal with MetaMask and a ledger and all that stuff. Like every time they make a transaction, Coinbase, the app is a great place to go. You obviously have a lot of restrictions on what you can do compared to if you were just self-custodying your own assets. But I think the trade-off there with the ease of use and with being able to connect your bank account like seamlessly and honestly the comfortability of a US based company, I think gives a lot of users more comfort than doing what we all do, which is plug that flash drive into our computer and toggle transactions on and off. And so yeah, I like Coinbase a lot. I think that it's likely that many that users are already accessing DeFi through Coinbase, in the sense that I wouldn't be surprised if Coinbase to a certain extent is like routing trades through decentralized exchanges to get better pricing on certain assets where there might be like more liquidity than on the Coinbase exchange. And with their earned programs, it's likely they're doing something similar, allocating funds to DeFi and earning some yield there. So I do think that more and more we'll see Coinbase being a front end to DeFi. I think it's really cool that they also offer these other like kind of Web3 native features. Like they're trying to build a decentralized app store, and they offer Coinbase Wallet, which someone could use to go access Uniswap and like avoid using the Coinbase platform if they wanted to. But I just think that goes to show that Coinbase seems to be a positive actor in the space, right? They've always kind of been pushing for the greater good of the industry, and it's not a surprise that many people are finding themselves on Coinbase, especially with everything going on with FTX, with Gemini, and across the industry. But
yeah, just enormous. I would just add the growth there is just phenomenal, which people overlook. If you look back to the previous cycle, they've 10x'd monthly transacting users versus where they were in 2018. They've 10x'd assets on platform. Verified users have 5x'd. This is an enormous growth engine. And as Ryan said, they're leaning into straddling that line between CeFi and DeFi. In crisis bear markets, you always throw the baby out with the bathwater. And a thing investors can do is try to figure out what the baby is and then hold on to that dearly. And I think this is one of those examples where you have that kind of opportunity.
Right on, yeah. It's hard to argue anything else than their reputation only strengthening over the last couple of weeks. And I think Brian Armstrong has done a pretty good job kind of being in the media and putting some positive statements out and kind of just like reinforcing where this industry is. And I'm still definitely bullish on the idea of centralized custodians kind of being that intermediary for users. I mean, in the long run, I just think it's too complicated for the average person to come in and custody their own assets, and maybe that needs to improve as well. But if we take a look at kind of more of like what Bitwise itself is doing, right? Been one of the leading and fastest growing asset managers. You have a series of publicly traded funds as well as some private funds as well. I'd love to kind of think about when you're building one of these new funds, like what's your thought process for how you create this fund and how do you include certain assets in it? And maybe it'd be better if we dove into a specific fund, right? So I think BITW is the Bitwise 10 crypto index fund, and I'd love to kind of hear your take on how you thought about going around building that portfolio.
Yeah, absolutely. Appreciate that. Yeah, BITW, it holds the 10 largest assets, but not actually. If you went to coinmarketcap.com and looked at their list, we'd be at asset 21. What we were trying to build there was a product that served a role for people who aren't, all in on crypto all the time, which is how do I make one investment and ensure that if crypto does well over 10 years, I'll be allocated to the most successful assets, right? Not pick Solana or pick Ethereum or pick Bitcoin, but have broad-based exposure. So we built this index that's diversified. It rebalances every month. So as new assets emerge, they enter the index. You gain exposure to Cosmos. You lose exposure to EOS as those shifts happen. And that's a beautiful thing. And then what we're really proud of is we built in these screens because this is a frontier emerging market. And the goal is to screen out assets that have significant hidden risks. So an example of an asset that we screened out was Luna. Another example of an asset that we screened out was FTT. Both of these were top 10 assets at one point in time, but they didn't make it into the index. And so we have about 7 screens that we use. The biggest ones, we screen for assets that we think might be found of having undue risk of being in violation of federal securities laws. So being on the wrong side of the line. That keeps a lot of assets out. We also look at the fundamental token economic design of a given asset. That's what kept Luna out. And then we look at things like liquidity and support at US custodians. We're a really conservative crypto asset manager, which is really annoying during raging bull markets, but feels good at times like this because we have avoided some of those blowups. That doesn't mean we'll avoid them all in the future, but it's nice that we sidestepped, those two, among others that we don't allocate to, and we continue not to allocate to. And happy to talk about those if there's interest.
Yeah, that's super impressive. That's like something you can definitely hang your hat on in light of everything that we literally just talked about. Ryan, I'm curious, what's a day in your life at Bitwise like? What do you do in helping there?
Yeah, no day is really ever the same here at Bitwise. It's one of the things that I really enjoy about working in the space, though. We spend a lot of our time focusing on education, and that's both internal education with making sure that our sales and investor relations team and kind of the company's up to date on everything going on in the crypto markets and the regulatory front, the macro economy, and the crypto economy specifically. And then we also spend a lot of time either writing and producing content like for our customers, which are the financial advisors, hedge fund managers, RIA, investment professionals. And that can be anything from like how to DeFi or what is decentralized finance for institutional investors, or how to think about NFTs as an asset class. So really kind of one-on-one level education a lot of times. And then we go on and have conversations with those advisors and with the money managers. And I really enjoy doing that because you get to see where where kind of like the broader financial industry is on adopting crypto, because at this rate, like most of my friends are either diehard into crypto and that's all we talk about like when we hang out, or they're so tired of me talking about crypto and they don't care about it at all that like it's just they don't want to hear about it. And so it's really interesting to actually be able to see and hear the conversations and the questions that were being asked. And honestly, there's some times where that financial advisors are so deep down into the weeds of crypto, they're talking about some token that like none of us have ever heard of or something, and you do wonder like where did they even come across that one. But yeah, we spend a lot of time just kind of bridging that gap, and so I would say education is probably the biggest thing we do, like I said, internal and external. And then we do a lot of research on product and kind of product strategy and just the space in general. And I focus specifically on DeFi, but yeah, we cover everything. Like I said, NFTs, Bitcoin, emerging L1s, L2s. So it really is different day to day, but it's been really fun, growing with the company for the past year and a half. And as the industry kind of grows and builds these new sectors out, we get to kind of follow it.
Yeah, that's painfully relatable on your friends either loving or hating crypto, and whether or not they're tired of hearing you talk about it. There's no doubt about that. But I'm curious, has that cohort of clients that you have, right? Has their interests or their needs, like, have you seen a shift in that over maybe the last 6 to 12 months at all, or is it kind of been a consistent interest in like maybe the larger assets like the Bitcoin and Ethereum's out there?
Yeah. Great question. I'd say first, one thing that's been really true over the last 12 months is that category is growing rapidly. So our number of clients, our client count doubled over the last 12 months, and we've been around for 5 years. So you can contextualize the size of that growth. We added as many customers in the last 12 months as we did in the first 4 years as a company. So that's a big piece. In terms of their interest, I don't know what Ryan would say. The biggest shift from my perspective has been moving from Bitcoin only to Bitcoin and ETH. They're very interested in Ethereum. Many financial advisors, family offices are more interested in Ethereum than they are in Bitcoin. It's even become cool in that segment to sort of scoff at Bitcoin and talk about why you love ETH. I do think they've started to move down the spectrum. There's more interest in Layer 2 solutions. I think that's a space that resonates with folks. And there's a fair amount of interest in DeFi because they know the financial services space pretty well. So stories like Uniswap and Aave really, really connect with those folks. On the flip side of the spectrum, there's very little interest in NFTs. I think it's fair to say. And it's hard for them to get beyond one or two layer ones. It's hard to get them interested in the fourth or fifth layer one, but it's hard to get me that interested in the fourth or fifth layer one. So we're not that far apart.
I was going to say it's tough to know where that breakdown occurs, like whether it's a understanding the different applications that all these different blockchains could have and their different trade-offs, or if it's just getting over the hump of understanding like blockchain and technology and the innovations it can offer, and then not wanting to tackle that next step of like, oh, there's now which one do I like choose, and which one do I spend my time diving into, and that's kind of, I think, why Bitwise is great in the sense that we can help advisors understand where the market's headed generally, and we don't generally like pick specific assets, and we can kind of help them understand like the trends. Like, yeah, scaling is a big trend. That's why we're seeing Polygon and Arbitrum and Optimism and layer twos like really emerge as part of the narrative, and why we're seeing alternative layer ones, Solana and Avalanche and others, kind of also emerge because things cost a lot and on Ethereum, and breaking down, I think, like what the differences in these different like L1s actually means to them, like economically, is one way we can add value, and just kind of putting it into layman's terms, like layer twos are reducing costs, and they've definitely heard that it's really expensive to trade on Ethereum or to transact on Ethereum, so they can connect to that thought. Well, there was one thing that I thought, I feel like I've observed over this past cycle, or these past few months, is that there's a little bit of a lag between what everyone's excited about, like in the crypto industry, and then where that excitement falls in the traditional market, like traditional financial participants. And I don't know, it's not like a full cycle behind, but it is really interesting that when Solana and Near and like all these L1s over the past few years were like emerging and growing really quickly, like we were still working on or still helping understand like what is a smart contract platform, and what are crypto applications built on top of blockchains and stuff. And so now that base level is kind of there, I think that there's more of an appetite for other L1s, but there is just some level of there being a little bit like longer lag, and then staying up to speed with the new developments, just from not allocating 100% of the time to it like we do.
Yeah, I think that's right.
Yeah, absolutely. There's definitely a learning curve with a lot of this stuff. Something interesting that you said, Matt, was that they're not interested in NFTs at all. Because like, I think it's funny because back from 2017, 2019, it was always like blockchain, not Bitcoin, implying that it was a technological innovation, but Bitcoin was worthless. And here it's kind of the other way around. And I think it's surprising that they're not interested in it, because you see like companies like Starbucks, Meta, et cetera, understanding that. But then, traditional financial investors, maybe not so much. But anyways, on another point, I'm curious, is your guys' basket of assets backed by custodied funds? And if so, where are they custodied at? And then on top of that, do you guys partake in the governance process in any of the assets that you're invested in?
Oh, that's a great question. All of our assets are custodied at third-party institutional qualified custodians. So the Bitwise 10, BITW, is custodied with Coinbase Institutional. Our DeFi fund is custodied at Anchorage. Our Bitcoin fund is custodied at Fidelity. And we do that for security. We don't lend our assets. We don't stake the majority of or any of our assets at this point. Because there's added risk on there. So we just take assets and stick them in. Ryan's been close to governance, so I'll let him jump in on the governance front.
Sure. We definitely would love to participate in governance. I think Matt spoke a little bit of this earlier, is that we're a very conservative asset manager. And with that comes the fact that we only work with certain partners, and those partners that we use for custody, like Anchorage and Coinbase and such, like have to be able to support participating in governance while still safely and securely storing those assets in cold storage. So there's a nuance there, like technologically, that's still being worked through. It's definitely possible for a handful of assets. And obviously, the way things are built in crypto, like once they figure it out for one governance structure, they can expand that to the other assets they support that share that governance structure. But so we are looking at it and like interested in doing it. Definitely with the DeFi fund, as you can imagine, even with Uniswap being in the Bitwise 10, we do accumulate a lot of these governance tokens one way or another in our different funds. And so there is somewhat of like a duty to the industry at some point, right, to participate in governance. And I think we're all like bought into Web3 at Bitwise and in crypto. And so I feel the want and desire to do that. But there's just a little bit of not being able to quite yet in a way that still is appropriately safe and secure. But I think, we could eventually get there. And I'm excited about being able to, contribute and participate kind of on the ground level. I know at a personal level, I'm like on those forums and in there and stuff. So I'm excited for when we turn that corner and are able to do it.
Yeah, absolutely. That's it makes a lot of sense. And even on the Uniswap point, I was looking at your DeFi fund and noticed it was about 56 or so % of the overall fund. And I'm curious, is that mostly related to like a market cap weighting, or does that come down to just like expressing a more of a view on how you feel about these assets?
It's a market cap weighted index. So all of our indexes are market cap weighted indexes today that we support. Matt, correct me if I'm wrong there, but at least with the DeFi fund, it's based on the market cap. We don't have any caps either. A lot of indexes could have caps on how much could be allocated to a certain holding, but we generally don't cap at that. We have our methodology that Matt talked about, and if an asset passes the various elements of the methodology, its percentage of the top 10 from like a market cap perspective really dictates its holding. And then we rebalance and reconstitute on a monthly basis for any changes, but it's still based on a market cap weighted approach.
Although it's also true that we or at least I love Uniswap, big fan. So I'm happy that it has a significant weight.
Yeah, and you guys are diversifying your custody risk. That's so responsible for crypto. What are you guys doing there? That's great to hear. I think it's fair to say that on the research team over at Blockworks, we're pretty bullish on the Ethereum ecosystem and the Cosmos ecosystems. Like those two just like structurally seem to have two like pretty good roadmaps. So I'm curious to hear your guys' thoughts on how that's playing out and where you think this space looks like, and whether it's an ETH dominated future, a multi-chain future, a bunch of app specific chains. Just love to get your thesis.
Oh, I love it. Ryan, you go first.
Cool. I think I definitely came into the crypto ecosystem from like an Ethereum. I don't want to say maximalist, but like Ethereum was kind of like the blockchain that I like learned about and then became really interested in crypto. So I think there is an element that's hard to shake, where the bias would be that most things should consolidate back to Ethereum. I will say that I was widening my view that we would have like a many multi-chain world and during the bull run, but I think it's rather obvious now in hindsight that there's not that users and capital don't really want to aggregate across a bunch of different layer ones and app chains. Like it's not a great user experience, and we're seeing that with like the lack of security in bridges and having to take on risk just literally moving from blockchain to blockchain, or take on risks if you were using one app chain and going to a different one. And so I think that users are really not going to like prefer that in the long run, and would rather just stay in one ecosystem where you don't have to bridge assets, from A to B or from app A to app B. So I definitely think there's going to be a few chains, but likely Ethereum would be the largest. Definitely bullish on like L2s and scaling solutions. I don't have a negative view of Polygon and sidechains that I know that some do. So I'm generally bullish on just the amount of developer and activity, the number of applications, the amount of capital. All of those like fundamental metrics are generally accruing to Ethereum in the bear run mostly, but also in the bull run we saw some big spikes. So yeah, I think Ethereum's probably like gonna lead the way for a long time. Cosmos is really interesting. I mean, one of the most interesting things, in my opinion, about Cosmos is that we had the whole Luna UST blow up, which was like a Cosmos like sidechain, whatever you want to call it. And so, and yet Cosmos operated fine throughout the entire implosion. Still does, still a flourishing ecosystem, and I think that's really, really interesting. But yeah.
Yeah. I would just add, I love that you call those two out, Sam. I would call them the two most interesting things. A mistake I see crypto investors making all the time is to take something like Ethereum and assume that something is 5 or 10% better on individual technological specs will overcome Ethereum's giant network effect. That's never worked in technology. If you want to replace an incumbent, you have to be 10x better, not 10% better, or you have to have a completely different technological architecture. And that's been true whether you think about mobile, cloud, social, whatever technological paradigm you've been at, the incumbent always wins unless there's something that's radically better or radically different. What's appealing about Cosmos is it's radically different, right? It's a completely different architecture. I think people who try to like overclock ETH or increase throughput by X%, I think that's largely a fool's game. But I do think those two ecosystems are interesting. And I also think it's early enough that even if you have high confidence that Ethereum is going to be the winner, it would be foolish not to diversify to some of these other interesting architectural approaches. Because even if you're wrong, your risk-adjusted return is better off because there's a chance that that is valuable too. So you want some exposure there. But I think those are probably the two most interesting at the moment.
Yeah, Sam and I, we kind of jab about this all pretty much every day, to be honest. He's definitely the ETH bull in the crowd, and I do have the same view, right? Like it is the dominant ecosystem, just as you described. It has those network effects. It does have the user base. It has the funds. But to me, like the app chain ecosystem is super exciting because it adds another design space for developers to leverage with the validator network, and I just think that's something we're going to see really pushed forward in the next year, and I think DYDX is actually going to be leading that push. Last week we talked to Antonio, the founder and CEO, and he kind of gave a little bit more insight into what exactly they're doing. But I'm really excited to watch that development push forward. And then I guess if we kind of think about the crypto landscape as a whole, like what do you think is going to be the next unlock that brings in that next wave of users? Is it going to be something that already exists and we just haven't had the time for it to draw that in, or is there a new innovation that's waiting to pull this next wave in?
Yeah, I think it's going to be a new innovation, but I specifically think it's going to be the combination of three different things. So one of those things is increases in regulation that makes it safer for more people to mainstream into it and defines more clearly the parameters in which you can play. I think that's part of it. The second is throughput. If you look back at what broke in 2021, a lot of people say the Fed broke the market. A lot of people say over leveraging broke the market. But the cost to transact on ETH went from $1 to $200. You can't do much when it costs $200 to do a single transaction. So I think sort of the throughput is the second piece of that puzzle. And then the third piece is new applications. I don't know what those new applications will be. I think DeFi will grow. I think stablecoins will grow. I think we'll get 1 billion NFT applications. But there's so much developer activity, so much venture capital coursing through the system. When you take smart money and improving regulations and improving technology, you typically get something really exciting. And I think it's, we could speculate, but if we knew the exact app, we'd go and build it. I look more at these preconditions, but the preconditions look better than they ever have in the history of crypto. The preconditions today are way better than the preconditions before DeFi summer. They're way better before, the launch of Ethereum. The preconditions today are just ripe for a Cambrian explosion of really interesting apps.
Yeah, I think that's right. I'm really bullish on stablecoins personally. I think that how expansive the stablecoin ecosystem has gotten, and how much liquidity we have in the stablecoin ecosystem across different stablecoins is really bullish for the space, especially in the cycle that we're seeing now, where like everyone has moved risk off. I think in past cycles they've moved out of the crypto ecosystem generally, and so then you have this lag effect in the next bull run where like that capital has to move back into the ecosystem. But I think today it's largely just kind of like sitting, waiting on the sidelines. And I think that that's better for that moment where we do kind of turn and see the next bull cycle take off. I think we'll have more of a loaded spring, like ready to release. But the actual catalyst that I am most bullish about for the next cycle is already kind of started with NFTs and the transition of like viewing NFTs not as singular pieces of art that you're like speculating on the price rising and dropping, right? And more of their utility and functionality. I think Blockworks actually recently put something out that was really interesting on dynamic NFTs. Like Tesla came out with this like concept of dynamic NFTs, and where if you have a car and the metadata about the car is updated over time and accrues that NFT, so like the mileage, the maintenance, the year it's bought, right, all of that stuff, kind of like a I guess like a Kelly Blue Book, but like in a dynamic NFT. And you can just think about how that application like goes beyond just buying and selling profile pictures. Like like the auto industry is gigantic, and to be able to start applying these like crypto innovations in real use cases, especially with NFTs. So we saw Reddit with their digital collectibles, and we see Starbucks rolling out like NFTs to their loyalty program, and then we're seeing these other use cases like title insurance and dynamic NFTs for vehicles or real estate or what have you. I think that's the type of stuff that's really going to fuel this next bull market, because it takes the conversation away from speculating on price and more about benefiting from the utility. And that's, for me, what helped me kind of transition into fully believing in kind of NFTs and crypto and like this Web3 ecosystem. And so, yeah, I'm excited for the general public to make that transition.
I love that. Can I test one other thing on top of what Ryan said? Because it got me all excited. The last thing I'm really excited about is that the space is just so small right now. Like if you remove Bitcoin, the entire space is $500 billion, same size as Louis Vuitton, the parent company of Louis Vuitton. You could own all of ETH and all its alternatives and all of DeFi and all of stablecoins, or you could own a manufacturer of purses and champagne. And I think when you think about that comparison and you think about all the things Ryan said about all these incredible things that could happen, you see the scale of the opportunity and you're reminded just how early it is. Sometimes if you're in crypto for a while, you look at those numbers, you're like $500 billion. Wow, that's big. It's a quarter the size of Microsoft, and it's equivalent to LVMH. I mean, it's still so small, and there's so many big things coming that it gets me pretty excited.
Yeah, absolutely. Now, you guys have already been super generous with your time, so I'll only ask one more question. But and maybe Ryan, I'll ask this one to you. But tokens like GMX and a couple other projects that return revenue back to their token holders have like fared really well this bear market. So I'm curious if you think that's kind of where the future is headed. If you think it kind of walks the line of security, non-security. If you think that's just your general thoughts there.
Yeah, it's definitely, I think, a narrative that has been missing from a lot of DeFi tokens over this last cycle. Like we got so caught up in the DeFi applications like drop governance tokens, and that's what gives them value, that I think people have strayed away from the general understanding that like these DeFi applications are businesses. Like, I mean, they're software, but they're like businesses in a way, right? And so it makes sense that in order for them to continue growing, that they do need to generate some kind of cash flows, and that like those cash flows should either be distributed to investors, like a dividend, or used as a buyback, or used to really like invest in future growth, which to me makes the most sense for these companies right now. And so I think like with the Uniswap fee switch conversation kind of heating up again recently, that's a great example of where there's a lot of value that can be captured here, but until there's a way to turn that fee switch on, and whether that's allocated to token holders or like used to fuel growth, like we're not really seeing the full potential of Uniswap. And so I feel like that's kind of how I feel about other tokens who are kind of embracing this like cash flow models. Like that is what is needed to get DeFi applications to go from a single use case or a single like protocol to multi-vertical businesses that are growing and flourishing and sustainable in the long run. Because like how else do you have a sustainable business unless you're somehow capturing part of that value? in either like refueling growth, either by drawing in investors or reinvesting in growth. So I do appreciate that narrative. And I don't think that just because you turn on like a fee switch, it turns something into a security. There's a lot of cash flow generating assets in the world that aren't securities. So I also think that the debate of whether that specific nuance, like with Uniswap, for example, would make it a security is overblown. And so, yeah, it's really nuanced like space, but I'm generally supportive of wanting to, turn on some kind of cash flow for token holders. I think that draws in more capital. You can use that to fuel the ecosystem. And if it's done right, I don't think it automatically implies that the token is a security.
Clip it. That was good. I love that answer. Yeah, that was great. Matt, I don't know. Did you have any thoughts on that topic? Are you ready to call it?
I thought he nailed it. All good. Ryan got it.
Well, do you guys want to tell people where they can find you?
Sure. You can find Bitwise at bitwiseinvestments.com, or I'm on Twitter at Matt_Hougan, which is spelled funny, Hougan.
Yeah, and I am. You can find me on Twitter at Rasterly Rock. It's like Casterly Rock from Game of Thrones, but with an R, no space. I also try to post a lot on LinkedIn. That's like a growing kind of crypto space. So you can find me over there at Ryan Rasmussen as well.
Awesome. Well, thanks so much for hopping on, guys. We'll see you next time.
Thanks for having us.
Thanks for having us.